Hello investors and welcome back to the channel. I am Mithali Dhoke, here to simplify mutual fund investing and guide you on a smarter wealth creation journey. Indian equity markets have declined recently, influenced by a steep correction in IT stocks. After the US government announced its plan to charge $1 lakh fee on H-1B visa applications. Foreign portfolio investors, also known as FPIs, have withdrawn around Rs 79.45 billion from Indian equities in September 2025, contributing to a cumulative net outflow of Rs 1,380 billion so far this year. There is a risk-averse environment globally, as geopolitical tensions and macroeconomic issues keep affecting market sentiment. Against this background, some sectors have shown resilience. Infrastructure and energy stocks have performed well. In such market conditions, embracing a diversified investment approach has become even more important. Multi-cap funds, which invest in large, mid and small cap stocks, provide diversified market exposure with reduction in sectoral risk. This diversified approach helps investors to grab opportunities across all market segments, with portfolios positioned to handle volatility while being invested in potential areas of growth. Thus, multi-cap funds are a balanced way of dealing with market volatility while achieving long-term growth. In this video, we have shortlisted 3 multi-cap funds through a robust evaluation framework, which considers 3 years XIRR returns, risk-adjusted performance and other crucial metrics. All funds have been rated through our own proprietary internal model to provide a holistic analysis of growth potential as well as portfolio fit. Investing in a multi-cap fund through SIP enables investors to ride market cycles and average out entry points. A disciplined monthly SIP of Rs 10,000 in these funds would have resulted in significant long-term wealth creation, as the table demonstrates that these funds have provided good SIP returns over 3, 5 and 10-year period, surpassing the category average as well as benchmark indices. The risk metrics also show how effectively multi-cap funds have navigated volatility and generated returns. This blend of stable performance and positive risk-adjusted returns validates their position as a core holding in a portfolio of an investor. Let us have a look at the funds. First is the Axis Multi-Cap Fund, which has proven itself to be a core option for investors looking for diversified exposure by market sizes. In the last 3 years, the fund has provided a rolling CAGR of 24.18% with a steady risk-adjusted performance, underlying its value style of disciplined investing. As of August 2025, Axis Multi-Cap Fund oversees assets of Rs 83.29 billion, highlighting consistent investor faith in its approach and record. The scheme is invested in large cap to the extent of 46.95% and in mid caps of 26.18% and 24.38% in small cap stocks. The portfolio is diversified with more than 80 stocks, with large cap exposure in structural growth opportunity sectors. Major holdings are HDFC Banks at 6.29%, ICICI Bank at 4.9%, Reliance Industries at 3.17% and Fortis Healthcare at 2.51%. Sector-wise, the fund focuses on banking at 15.38%, healthcare at 12.16% and automobile and ancillaries at 10.93%, balancing cyclical and long-term growth. Second is the Nippon India Multi-Cap Fund, which was launched during March 2005. It follows a strategy of tactfully distributing funds between large, mid and small cap shares. In the last 3 to 5 years, the fund has registered rolling CAGR of 22.6% and 25.51% respectively, based on consistent risk-adjusted performance, which is a testament to the efficacy of research-backed stock selection methodology. As of August 2025, the fund holds assets of Rs 462.16 billion. Reflecting high investor confidence and its strong long-term track record. The portfolio is diversified and generally has about 45.52% in large caps, 25.26% in mid caps and 26.61% in small caps, with significant exposure to industries likely to sustainable growth. The key holding includes HDFC Bank at 5.14%, Axis Bank at 3.64% and ICICI Bank at 3.32%. Riding structural growth patterns and expansion based on innovation. Sectoral exposure are led by banks 14.68%, capital goods at 9.67% and finance at 8.76%, combining cyclical and secular growth prospects effectively. With its multi-cap strategy of allocation, prudent stock choice, and capability to steer through fluctuating market scenarios, Nippon India Multi-Cap Fund is suitable for investors seeking portfolio diversification as well as exposure to India's growth story. Third is the ICICI Prudential Multi-Cap Fund, which was launched in October 1994 to provide diversified equity exposure to investors with potential for growth combined with risk mitigation. The fund's active investment strategy enables it to alter the positioning according to the state of the market, participating in growth opportunities while preserving stability during times of turmoil. In the last 3 to 5 years, the fund has reported a rolling CAGR of 19.86% and 20.85% respectively. The steady risk-adjusted performance indicates a thorough investment process as well as a sound research framework. As of August 2025, ICICI Prudential Multi-Cap Fund has assets under management of Rs 152.81 billion, reflecting investor confidence and its consistent long-term performance. The portfolio is diversified across large cap, mid cap and small caps, generally with a holding of 43.74% in large caps, 26.56% in mid caps and 26.53% in small caps, with strategic play in high growth sectors. The core holdings are ICICI Bank at 5.48%, Reliance Industries at 3.36% and Infosys at 3.35%, which provide exposure to financials, energy and industrials segments that are well positioned to benefit from both cyclical rebound and structural growth. The sector weightings focus on banks at 15.2%, chemicals at 7.9% and healthcare at 6.45%, a balanced combination of stability and growth opportunities. Now to conclude, as the Indian equity market navigates a phase of sectoral shifts and selective growth, multi-cap funds provide a flexible way to participate across large, mid and small cap opportunities. Their diversified approach allows portfolio to capture emerging trends while maintaining exposure to established leaders, making them well suited for investors seeking a measured participation in equities. Investment via SIPs that assist in controlling timing risk and offer a structured path to build wealth across market cycles. In today's market scenario, incorporating multi-cap funds in one's portfolio could be an intelligent approach to accommodate both changing market dynamics and long-term investment objectives. So, if you like this video, please share it with your friends and relatives. To watch more interesting investment-related videos, kindly subscribe to our channel. Mutual fund investments are subject to market risk. Read all scheme-related documents carefully. Registration granted by SEBI, enlistment as IA with exchange and certification from NISM is no way guarantee performance of the intermediary or provide an assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.